Crypto pulled a move that should have been impossible. While the S&P 500 and the Nasdaq are rolling over into their fourth straight weekly loss, XRP, Bitcoin, and the broader crypto market were actually holding the line and a strong range, marking the very first time we've seen what could potentially be the decoupling event away from traditional risk assets. Because in the past, if the stock market was down, crypto was crashing even harder, but that doesn't seem to be the case right now. In other words, this shift is telling us that the data is no longer following the old rules. While the big banks are watching their stocks lose fuel, digital assets are building a base that signals a massive change in how the world is currently looking at money, liquidity, and where to hedge against risk. The Pentagon and White House are still navigating this mess at the Strait of Hormuz, which has remained shut for quite some time now, creating for greater levels of inflation, while insurance premiums for shipping have gone through the roof. Now, this global uncertainty usually forces a sell-off in crypto, but right now the opposite has happened. And with every major dump in the stock market, crypto is not dumping anywhere nearly as hard, which might actually signal underlying strength. Now, this is a recording from a live call that I hosted for our private community at Altcoin Pro, and is always extremely valuable because I teach and share the stuff that we simply don't often get to on the channel, which means I'm going to show you the specific chart levels that prove why the link between the stock market and crypto might be breaking and there might be an actual decoupling, which you'll figure out whether or not that is true this week, because this might be the very last time, or at least the last cycle, we see crypto trade in tandem with your traditional financial markets. Now, before we dive into the video, join us in Las Vegas, April 26th through the 27th this next month for Bitcoin 2026. And when you grab your tickets through the link down in the description of this video, you can get access to a 10% discount on your ticket, or when you apply the code BULLRUNNERS when checking out. This is going to be one of the largest crypto events of the year, and we're super stoked to see y'all there. So let's dive into the video. And as always, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. And it has been quite a wild ride this last month. Orange just shared that, I come from a place of knowledge and don't just speculate. And I was just making I guess, responding in manner that we all the time we really are just speculating on what's going to occur. I think the difference would be just, a high level speculator would be someone who acts with information and with good risk management and discipline. Whereas the majority of people that are speculating in the markets might be people who are just like hoping for something to go up, or don't practice good risk management, right? They buy something because maybe they saw someone talk about it, and they FOMO. And if you ever feel like you're gonna miss out, you're like, if I don't buy it now, it's gonna go without me. Like, honestly, the best thing you can do in those situations and environments when you feel that feeling is to sit on your hands. And if it does go up, let's say for whatever reason, there's a 50-50 chance, guys. Like, really think about that. It goes up and it goes down. Those are the only two directions a market really goes in, right? Every now and then it ranges or trades sideways for a while, then does one of the two. But that's the reality. And so if you ever see it move without you in the direction you thought it would, note that. And then understand, at what point it actually, maybe go look at the chart and look at what point it actually did turn to the upside or the downside. But more than half the time we'll probably be wrong, right? I'm wrong more than half of the time. It's just that my wrong trades are so minuscule compared to my winning trades because of good risk management. And the better you get, it's like even the best, I remember an old mentor, some of you guys have heard the name Jim Rohn. For me, he used to say, it's like how, when you're at bat as a professional baseball player, like how often do you have to slam a home run? Matter of fact, how often do you just have to bunt the ball? At the end of the day, if you hit it, 3 out of 10 times, you're still making millions of dollars. And the same thing applies to sales. The same thing applies to markets. So you don't need to be right all the time, but I do believe you do need to practice patience and risk management. And if you ever feel like you're going to FOMO into a trade, the best best thing you can do is just sit on your hands and then actually be disciplined enough to make notes on what occurred, what you felt, what happened, and then look back, retroactively and say, at this point in time, it actually did break down. Now, if you do decide to take a trade because you're FOMOing, and that's fine, some of us need that fix in the same way you got to get like a heroin addict, to come off of heroin, you got to give them a little bit, and a little less, 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 right? Some of us are like that in markets. Markets are very similar in terms of the psychology, like sugar. One thing I would say then is practice instead of going in with 25% of your account. Is if you got to get that fixed, just do 5%. Because if you set no stop loss whatsoever on a 100K account and you bet $5,000 and it goes in the wrong direction, let's say you lose 5,000, does that really hurt you for the rest of your life? The answer is no. But it hurts a lot more to blow a 100K account and now you have to go and build it back up. So that said, is that a Bull Runner sticker behind you? I don't think so. I don't know what sticker maybe it's someone else. Oh yeah, that's Mohammed. Um, Anyways, I don't think I am. I'm wearing a Nike hat today. But let's go ahead and get the call started. So the first thing I want to cover, now that we've covered a little bit of the psychology, philosophy, whatever, is this economic calendar. Again, it's just a basic overview. We could go a lot further in depth into these types of things, but we don't necessarily need to. It does look like, and I haven't been up to date exactly on what Trump has said today, so I've really got to dive into that a little bit more in order to be educated about, before I just go share a bunch of things. But recently, I did see Trump make a statement on the jet through the press when he was on Air Force One. Like, I don't even know if we really need to be in this thing. Like, at the end of the day, we produce so much oil here, like, we don't need it over there. Then I was actually looking back through statements from Press Secretary Marco Rubio, right? Like saying, well, Israel was going to do it with or without us. Like, they were already going to go. So we decided to jump in on board. And so it does look like, and then recently, let me go ahead and share. Let's go here. We saw a pretty interesting statement. Let me go to my bookmarks. I know that I save a lot of things here. This one was quite interesting. This guy, his name is Joe Kent, who was the director of the National Counterterrorism Center. He worked directly under Tulsi Gabbard and obviously the president, and was involved in the military as I believe, I don't know what he was. Let's click on it real quick. A retired Green Beret in the military. Basically put out a statement saying, I can't support this war. And one of the most interesting things he said was, I cannot in good conscience support the ongoing war in Iran. Iran posed no imminent threat to our nation, and it is clear that we started this war due to pressure from Israel and its powerful American lobby. And now that Trump is starting to see the numbers, come out and how few even Republicans or, potential MAGA diehard type people are supporting what's really happening. And at the end of the day, even if they did, they're going to start to feel it in terms of the gas pump. They're definitely going to start to feel it in terms of the prices of everything rising and inflation. It's extremely unlikely. I can't see any situation in which inflation, and this is starting to be real bright here, um, in which inflation doesn't actually go up. Like it's extremely likely, okay? And whether it goes up a few points or 100 basis points, 200, we don't know. But what we do know is that inflation is likely going to rise. And so as this all comes to a T, and as the Republicans are already losing pretty bad moving into the midterms, if this war continues to rage on, which again is extremely likely to the tune of 12 to 18 months now, according to my research, and I'm going to put out another market pulse report here very soon on past wars, our statements from military commanders and presidents then, and how often they would say, well, this thing's going to be over soon. And it never really was. And the exact timestamps and statements, which leads me to believe, and then using, a few, different, I always backtrack against different AI systems. Like, is this statement true? How, like, this was the analysis from this one. Can I get the exact same analysis here? Or are there some discrepancies? And more often than not, consistently across the board, we've seen wars continue to rage on, whether they escalated in terms of numbers or not. And at the end of the day, the longer a war rages on, right, there is a higher death toll. And dependent on the region, there's typically higher levels of uncertainty in markets, which leads to sell-offs and also, inflation. So, but more so now, especially now with the Strait of Hormuz and the lack of oil coming into the country. In the reality is, Trump says we have a lot of oil, which is actually true. We do have some pretty big reserves. The problem is we don't have the capacity to do the output we need right now. So it would take many, many years of building infrastructure, right? And working with regulators in order to get this stuff done. So it's no different than saving face when we're talking about, putting 400 million barrels of oil out through our strategic reserves. At the end of the day, we just can't get enough out there within the time frame that's needed and necessary in order to save the economy. So now you have this, and basically what he stated here, and this is something that's very interesting. And I think Trump is kind of caught in the middle of this. Actually, I'm starting to see that. That at first, if you look back at Trump's statements in the past, Trump has always been kind of like, they had no weapons of mass destruction in Iraq. Well, we went into that war willy-nilly, right? And then a more recent statement was, well, Iran does have weapons of mass destruction. Again, this isn't a pro-Trump, negative Trump type of a talk. I'm just trying to get the clearest picture I can to better understand the markets here. Okay, like I'm actually really trying to take that approach. I do it with markets. I have to do it with politics. If I'm not going to be, super pro anything, because if I'm too pro anything, then what happens, right? I think my thinking is clouded. Like truly, my judgment becomes clouded when I'm pro and con anything here. So I just have to kind of read between the lines in the language. So then Trump says, it's better that we did this than let them get to that point where they can produce weapons of mass destruction. And so it really does seem now with this statement from Joe Kent that he believes that they truly are that there is an Israeli lobby that is pressuring this thing big time. When you backtrack it against the statement from Marco Rubio, okay, our Secretary of State, it seems to be true. Like there was a lot of pressure for us to be involved here. And so from that perspective, it's like now you have this guy, basically hopping out of it. He says, I was a veteran who was deployed to combat 11 times as a Gold Star husband who lost my wife, Shannon, in war. And maybe he's, really negative Israel. We don't know. Here's what I do know. I do believe that now Trump is looking at this thing like, uh-oh, this is a massive PR scandal. This is going to become a major headache moving into the midterms. And now this war is going to cost us at the pump. And that's going to make my economy look really bad. It's going to make me look really bad. And we know Trump loves his name. So we have to think about that. It's like, okay, what do we do here? And the reality is there's nothing we can do. The likely outcome now that we're there and now that we're not seeing I do believe, let me look at this one. It's going to be hard to find. I should have pulled it up beforehand. And then we'll cover the charts, guys. Jim Bianco. Let's go to Jim Bianco. I save a lot of things, by the way. So it's kind of how I get into the research here. Where's Jim Bianco? There it is. Made a statement saying shipping does not normalize because of slogans. It normalizes when the passage is clear, verifiable, insurable, and durable. Right now, it is none of those things. So this is not Iran loosening its grip on the Strait of Hormuz. It's a PR spin designed to sound reasonable. And this is the key point, guys. And the reality is no matter what, insurance premiums are going to be through the roof for shipping through there for the foreseeable future. We're talking at least years, which means everything is going to go up in price, period, end of story, that relies on that route. Until owners, crews, charterers, and insurers can move without ad hoc political tests or special permission, the strait remains squeezed. And it will continue to do so until they're confident that there's not going to be any more escalations or issues. And the reality is we're nowhere near there just yet. Okay. So when we really think about that, you have to take that macro outlook and perspective into the current market environment. Then you look at how is everything acting? Okay? Like how is this market acting? How is that market acting? And so, and then, you have to focus on, well, what's coming up? What are the major events that are coming up that are consistent? We're not talking about inconsistent events, even though war is consistent over history. That's something you can't predict. We don't know exact dates on it, right? We're talking exact dates on macro, events that are going to affect our money and our economy. One of those is going to be the FOMC press conference and the interest rate decision. Now, inflation, if we look back, where was it? The year over year inflation came in flat, but this is looking backwards. I believe it January, so I have to double verify that. Okay, which means this is like old data, and we were already flat. We didn't go down to a 2% reading, which is the core mandate of the Fed with Jerome Powell. Now, will that be the mandate directly with Kevin Warsh stepping in? I'm not sure, but I would assume he's going to have to keep interest rates flat or even increase them. The problem is if he increases interest rates to, let's say, 4%, another 25 basis points, it's going to freak markets out. Market, like, genuinely, I think the S&P would dump tremendously. We're probably talking like 8% plus in a single day if that occurred. Okay. And stocks and I think crypto would tank on that news as well, which means he's likely going to have to keep them flat. And he might likely have to keep them flat for way longer than we expect. And now markets are pricing in that we're getting zero interest rates cuts at all in 2026. Because if they lower interest rates, right, inflation is going to continue to rise, yada, yada, yada. So there's no good answer here if you're in the Fed. And so anything he says now, he's going to have to be extremely careful. Like Powell is going to have to be walking on eggshells tomorrow. Period. Like there's no way around this. People are going to ask him all sorts of questions about inflation moving forward, the press conference and all that stuff, moving forward with like, well, if this were to happen, how are you guys going to respond? What's going to happen with, this key metric and that key metric? And he's just going to basically have to find ways to say nothing. And you know what? We're just relying on the data. That's all he ever says, which means here's the thing: the trend is your friend. This is my point. Likely, we're not going to get any shocks here. This is the first thing that I'm thinking about. We're likely not going to get any shocks on the Fed interest rate decision or the press. The press conference, which means the market, okay, is already telling us or giving us signals about what's going to happen. Okay, so let's dive into that first. Um, First thing I'm going to look at is QQQ. It's just an index like the NASDAQ, just at 603 versus 24, exact same chart essentially. I like the QQQ a little bit more. It's easier for me to look at. That said, you can see that we topped off at around 636 back in October. Okay, similar time frame to Bitcoin and crypto. So I kid you not, this was almost the exact top in crypto. Crypto topped off around October 6th by October, at least Bitcoin and a lot of the crypto market. Then by October 10th, we dumped heavily with loads of leverage, right? The biggest liquidation event in history. That means we were over leveraged. There were probably some really bad actors, the Jane Streets and the Binances. You can notice that in that same time frame, the QQQ dumped and rolled over for a second, right? Now, when you start to see this type of volatility, if you're not good at trading volatility or potentially knowing what's going to occur in this range, best to stay away. Whenever you see these types of dumps and rallies, okay, massive, I mean, that candle right there is a nasty candle. Okay. Then you see gapping up a few days in, then immediately sold right back off. Nasty candle. Like this type of vol is not something you want to play in. It's not for the person who really doesn't know what they're doing, I guess is my point. And even professionals losing tons of money in these moves. This right here was very consistent with an exhaustion gap. Okay, something that Peter Brandt covered, something that I actually covered on these calls when I started doing the analysis, backtracking it against his. Now he's got far more, expertise, and he's been a veteran in the space for decades. We're talking 40 plus years. It's important to pay attention to these guys. And guess what? Often even they're wrong, but that's okay. They shift with the market. Okay. You got to take the blows with the market. Now, we saw a double top right here, and this is important to note. It looks eerily similar to when Bitcoin topped over here. Then we saw it break back down for range lows, okay, retesting these lows and another double top before what? Breaking down. Now, this thing didn't really have as much of a megaphone pattern, which means obviously it's not as volatile as Bitcoin, but I'll show you the exact chart we're looking at, okay? Very similar patterns. You can see that, we'll just put it right here, basically a double top, 1 and 2, okay? Just a slight rally back above the prior range high for a bull trap, broke down hard, double top, right? Kind of somewhere in the midline, really. Let me put a line right here. One high, two highs, break down, okay, below our range support, then became what? A resistance. What used to be a support more often than not in markets like not we're not talking commodities. Commodity markets are actually pretty different. So I wouldn't apply the same approach to energies, okay? Precious metals, maybe. But again, if we just think about stocks and crypto, let's keep it simple today. More often than not, supports that are horizontal work pretty well. Okay. This is one of my key, what I call the four horsemen of technical analysis. And so it did become a resistance. Now look at the similarities here. Okay. Double top, right? Breakdown, consistently retesting these range lows, and it's not perfect, but we're getting pretty close. Okay. You can see range lows, another double top, and guess what? We're breaking down and we're struggling to get back above the 613 range. So the QQQ, what was a leader, okay, is now really struggling to maintain its range highs. One. Two, we had laggards like the Dow Jones rallying after everything had rallied for new all-time highs. We're talking February, while things like Bitcoin and the stock market put their all-time highs back in October. So any lagging indexes, slower moving indexes, slower stocks, Dino tokens. This is stuff that you really want to pay attention to. Whenever they start rallying after the best performers through the whole market environment, the whole bull market from 2023 through 2025, we're putting in new all-time highs and outperforming everything, are now starting to roll over and lag and struggling to print new all-time highs. While, things that were lagging everything else, like the Dow Jones, are starting to put in all-time highs months later, another key indicator. We're getting very close to cycle tops. Okay. Third, you get the S&P 500 finally rolling over. Okay. Now we have this triple bottom type pattern here. One bottom, two bottoms, three bottoms, double top, maybe even a triple top, one top, two tops, three tops. It is possible, and I want to be clear. It is possible this thing is more resilient than I expected, and we start to trend back to the upside. My personal experience and opinion leads me to believe that we're likely not getting anywhere above the $7,000 range again. Like, period. Okay, and if we did, new outlook. You have to change your thinking. Now, really quickly, if you have over $50,000 in crypto sitting on an exchange doing absolutely nothing right now, you need to look at what we're doing inside of our Accelerator program at Altcoin Pro. You can find that link in our pinned comment or the very first link in the description below. Our members are averaging between 24.3% APR on the crypto they're already holding, whether it's stable coins, Bitcoin, XRP, Ethereum, and more. If you're really wanting to be conservative, we're looking at about 12.6% on average, whereas aggressive strategies are between 38 to 62%. Now, the banks are fighting this because they know when enough people figure out they can earn this kind of yield on their crypto, trillions of dollars in deposits will walk out the door. Now, we've vetted every single one of these strategies, and the team walks you through exactly how it works, even if you've never touched DeFi in your life. So click that very first link below for accelerator.altcoinpro.com, and let's dive back into the video. But me looking at the chart, right, already we're breaking and rolling over below this range support. And so this breakdown right here, really on the 6th of March, okay, is pretty consistent with a downtrend. And so this is a new It could be a short-term downtrend, but realistically, I'm thinking intermediate term to longer term downtrend. This is probably the actual top. I'm calling this right now. I think this is probably actually topped off in the stock market for quite a while. We're likely going to see a bear market. We're likely going to see a decline of at least 15 plus percent. And I would argue probably even more than 20, 25% before we rally. I mean, consistent with all bear markets in the stock market, when you really think about it, let's go ahead and just track it against 2021. Okay, in 2021, from the all-time high to the bottom of the bear market on the S&P, we were down 23%. If you're talking just not from a wick, about 22%. Okay. I wouldn't argue this is a bear market in April of 2025. It was just a pretty nasty, steep sell-off. I actually think we're going to experience some sort of a bear market. But this right here, you could argue potential bear market again, 2020, right? We just had tons of QE, so there's always some sort of a factor. But look, you can see 29%. Okay, to that bottom. So in an environment like this, if we did 15 to 20%, that's probably pretty realistic. And a 20% dump on the S&P is likely it used to. And here's, I guess, the new thing that I'm really starting to think about. Okay, potentially 20%, 5,600, still a higher low in a long-term uptrend. If you're talking from a weekly perspective, I mean, look at this market. Okay. And the reality is this market rallying for these highs like it is. Okay. When you really think about it, it's just a byproduct of inflation in the dollar. The value of the dollar is consistently declining. Fiat currencies are consistently declining. We're consistently injecting more and more liquidity into the system to save face. Regulators want to get voted in the next cycle. So it's not like the market is actually giving us this much more value, right? When we talk about GDP, real true economic growth and activity, it's just more so more dollars hitting the system. And so again, this is probably pretty high level talk if you're newer to this stuff. So I do apologize. I really just wanted to get out everything that I'm thinking and maybe we can summarize it. I'll take this specific call. I'll grab the transcript. I'll use it to summarize everything that was stated here in layman's terms, make it more simple. Um, but this right here is not good for the market, is what I'm saying. This is a pretty strong indicator that the market looks like it wants to go lower. So what are we seeing in every other market? And then we'll tie it back into crypto. Okay. First, let's go to gold, actually. Gold. Let's go to that daily time frame. As Peter Brand stated not long ago, and I'm beginning to believe it, and this is just an age-old adage and wisdom from some of the best, technical analysts through history. If something has every reason to rally and it's not, it probably can't. Let me repeat that. If something has every reason fundamentally to rally, which is what drives kind of the emotions, right? And the thought processes behind every investor so that they go dump money at it. If something has every reason to rally and it doesn't, it's probably because it can't. I actually think that gold was leading this market. I think that central banks and bigger investors who were in the right rooms, okay, caught wind of this a long time ago. And we're talking a long time ago, realistically, right? Let's go to maybe that weekly time frame. I don't think 2024. I think the macro picture was weakening. Central banks buying. But I think somewhere around that 3,000 to 3,400 level, okay, just from a technical perspective, it already plays out really well. Okay, we're into new all-time high territory, right? Consistently retesting the range of 3,400. I'm willing to bet volume really dried up through here. Let's see from a daily perspective. Notice how volume really increased, dried up, and then increased into the breakouts and new highs. Okay. If you really want to look at it a little bit more tight, increase, slowing down, okay, or drying up. This isn't drying up necessarily. This is a lot of volume. But the key is to look at the trend. Growth, decline. Growth, okay. What precedes growth? Decline. So here, notice how we're declining, but we're failing to break for new lows. So into what? A prior all-time high. Look at the breakout. in the volume. And actually, here's another really interesting tell. If we look at this one day, look at this. Look at how small this candle is, but look at the sell volume or the total volume on that day. Now let's look at the candle on that day. Do you see how small that candle is? Now you do want to probably test this against a few other gold markets, like other indexes. So this is a Wanda, and this might be an anomaly. I don't know. You'd have to look at it a little bit more closely. But if I'm just, let's say I'm just using this for my base level of data, okay? Virtually no, like usually on a big day like this, you'll see a big old red candle, just a massive bearish engulfing, something that takes us or breaks us down to new lows, like we saw on Bitcoin October 10th. Let's show you. I'll give you a really good example. October 10th. Look at this. Let's remove this. Do you see this right here? Huge breakdown. Massive bearish engulfing. Look at the size relative to every other candle in the range. Pretty big, right? This right here is indicative of no, this is a legit sell-off. Yes, leverage was in the system, but now where are all the buyers? There are no buyers. So at this point, everyone got liquidated. If there are no buyers, the trend continues to the downside. Okay. Now this wasn't the start to a new trend just yet. However, it was a tell. It was just an indicator. Let's get into gold now. You'll see a difference, right? There's something massively different about gold and how it operated on that day, right? Very small candle, which means there was a lot of fighting for that range. Tons of volume, tons of activity, tons of trading happened to the tune of about $4.5 billion dollars on that specific exchange in the gold spot market for Rwanda. Okay? So now what do we get, right? A slight little sell-off, that's fine. But notice how we're consistently putting in either same lows, okay, equal lows, or in this case now a higher low. Volume continues to dry up with one big old spike, but generally speaking, volume is drying up, drying up, drying up. Then into the actual breakout, what do we see? Volume expansion. Cools off for a second right through here, volume expansion. Okay. So my personal, and this is actually really good thought, a good training in volume, looking at any market, really, actually. If you can use volume, always use volume. Now, in this case, I think maybe they caught wind. I don't know. But they continued to buy and they were, thinking, they were forward looking to the point where gold rallied to a high of about 5,600 bucks. Okay. Now, since that point in time, okay, we have failed to break out for a new all-time high. We had this little range right here. You could call it a bear flag, and now we broke for a new low. So our next major lows on gold, and I actually think gold has topped off for the cycle. I think it could maintain a range in here. I don't know if it's going to break for new highs. I think it should already be doing that. And because it's not, I'd actually lean short gold, um, which is counter thought to crypto now. So let's look at crypto. Okay. Gold looking like it is. Oil, I think, is just going to continue to stay high. I don't want to talk too much on oil. Let's look at Bitcoin and then the crypto market. So last week, okay, and we'll look at XRP, we'll look at Solana, Ethereum, you name it. Last week we covered how in the past, well, let's look at the cycle, okay, in 2022. Breakdown, we're somewhere around 50% down here. We have a bull trap, rally back up to the range highs, right? And then immediately sold off. Where do we get a really good signal of this thing finally just, getting ready to puke? Right around here to here. Okay. So if something like this were to occur on Bitcoin or with the crypto market, again, I am leaning short. Okay. In terms of us actually being at a bottom, I'm still not too confident, which means I don't think the bear market bottom is in just yet. However, that confidence is waning with the price action that we're currently seeing. And so this week is the very first week that I'm becoming more of a believer in a true decoupling event. The price action is telling me that. I actually think that now is the first time I've ever seen the crypto market decouple genuinely from the stock market, from the risk on asset classes, which means crypto, similar to Bitcoin, was truly leading the market. Bitcoin, however, was treated, crypto, the whole crypto market was treated like a risk on asset class. And we know this. We've seen it over and over on the charts. If people are uncertain, they would sell their risk on asset classes, which would lead the prices to decline. In October, up until recently, we saw that. Okay. With gold, it was actually viewed the other way around. Now, you could argue, well, I'm educated. That's not how the crypto market should look. And I would probably agree, at least with a few of them, not the majority. The majority really aren't terrible. Okay. I would actually agree. The problem is, I don't think enough of the biggest investors in the world agreed. Does that make sense? Like when you have all of the big players, the central banks of the world, do they look at Bitcoin in the same way you and I look at it? The answer is no, right? At the end of the day, they're pretty data driven, a lot of these institutions, and they also just have a lot of old thinking habits, okay? Like the things that got them into those positions was a different world. They were living in a different world when they got into the positions that they got into. So they don't have to understand Bitcoin right now, nor is it at a size where they need to. At the end of the day, they're focused on their bank, their centralized authority. And so you have to think about it from this perspective. If they don't believe it and they're not behind it, it doesn't matter. At least not now. One day it might. So that's why I believe gold actually was rallying as a risk off asset, or excuse me, risk off asset class. Okay, so like gold being a good hedge against inflation, a hedge against, wartime issues, a hedge against uncertainty. And that's why I think it rallied. Bitcoin and gold were leading the market, but in different ways. Bitcoin and crypto were dumping hard. Gold was rallying. But now we're seeing the first time ever. This is something really interesting, at least from my experience of being in these markets long enough, and I maybe didn't notice it in the past. This looks pretty weak right here. Okay. Breakdown and then expansion of volume, and we just see markets tumble. Okay. Volume gets really tight down here because there's less and less sellers and buyers. People are uncertain. They're staying away. Maybe they lost their bag. You name it. Okay. This was a period of 30 days. Now let's track that against current. Let's go to auto. Do you see the difference? I was expecting something more like this. Let's right here. Breakout, break down, rally, potentially hang out, continue to play with the range, and then start dumping. But instead, we're actually seeing for the very first week, it's rallying. So that said, okay, I took a long position here, right? And guess what? I got no, no, I took a short position here and I got stopped out. Which is why last week, okay, I want to be clear. Last week I was telling you guys in this type of a situation, it's better to short into what? Weakness. Does that make sense? Why? Because I'm betting in the direction of the trend that I want. Why would I be shorting into strength? Now, this is totally fine to do. My risk was so small, it didn't matter. It's unlike this is why I keep my accounts separate too. Okay, so like I have three accounts for those of you guys who are new. I have a long-term investment account, I have a swing trading account, and I have a day trading with leverage account where I can play on like 10x, 20x, 5x leverage. Okay, those are three different accounts that I keep, and it's weighted where the majority of my money is in my investment account. I have more money than I do in my day trading account in my swing trading account, and then my day trading account has the smallest portion, upwards of 10% max at all times. Okay. So if I start getting weighted there, like I'm making money in those trades, I actually move it into my swing trading account or my investment account, or sometimes half and half, or depending on your strategy. But this is just my strategy. You don't have to do it, but this is what I do to protect myself because I found the more money I have access to with leverage, the more often than not, eventually I lose a little bit because of a lack of discipline. Maybe it's a lack of sleep. Maybe I've been on a hot streak. Does that make sense? Like these are key things that I found that work for me. It might work for you, but I found they work for me. So in this case, you don't lose much. Of 10% of my account on a 1% loss, there's nothing. But then what happened? We saw it rally and actually break right back into the range and now for a new high and close. And we're actually holding this support pretty well, right? This one day right here was an indicator. Now, where I got a little bit weary is just how tight the price action is getting here. We talk 1, 2, 3, 4, 5, 6, 7, 8 straight days of up. Okay, I figured maybe we're going to come back down and we could break down hard with everything that's going on. We're really testing the waters playing long here, but I've taken a long position now, which means in an XRP, okay, last week when I was like, hey, I have some shorts placed in these ranges at 150, 155, 162. Okay. I immediately, when we started seeing the direction of Bitcoin change, I closed them out completely. So the last one did not hit, which means I think one of them, I'm like, what, 2 pennies in profit? I took that off the table. Okay. No longer in an XRP short position. The only reason I had a short position in these limit ranges to begin with was if Bitcoin and crypto were kind of just chilling in the range down below. And for whatever reason, XRP rallied hard because of a market maker counter trend. Does that make sense? So let's say every now and then you'll see something like this that occurs separate from the market. Okay. But if the whole market is trending up now, do you think I want to be in a short trend or a short trade? The answer is no. I do not want to be shorting a market like XRP now that everything else is looking really good. The only reason I would remain in this short is if Bitcoin was back below, okay, this right here, somewhere in the 71,000 or lower range. And XRP rallied. And then I'd be like, okay, I'm confident with this. Or do you set a stop on something like that? Let's assume, right? This was I mean, assume we already know that this right here at 161 is the range high. Okay. So where do you set your stop now? Just above that range high. If you're in a short, the thing is, I don't want to be short XRP now with Bitcoin and the rest of the crypto market trading where it's at. So I've taken all of my risk off on that, which means you don't lose any money to do that. But in the case that it did rally overnight when I'm sleeping and then started selling off, you're in a good position, right? So you do have to actively manage these positions. I remember telling a few of you guys last week that I was in that trade. So no longer in the trade. I don't want to be in that. Okay. In terms of actually longing XRP, up to you guys. I wouldn't be taking profits off the table just yet if you're in a long position, but it's not looking bad now. So it does look like we've bottomed right here. Okay, somewhere around 135 to 125. And I would be waiting to see what occurs here at the 160. It's really hard to say. We have to look back at history, but let's look. You've got a decent amount of overhead resistance, right? You have a resistance here, which became a support in April of 2025. Yet again, even in the October 10th, 50% dump, okay? It's likely going to be a little bit of a resistance, but I don't think over the top. So we might hang out here for the next week. It's possible. If the crypto market really starts to rally, things are going to look a lot better for XRP. Okay. In terms of Bitcoin, I do believe with us above the range now, even and this is where I'm a little bit weary, kind of weak volume, nothing great right now. And this is why you really want to be cautious in this environment. It's possible that this is just a retrace. It's trading counter trend for the next month and then continues to dump with the rest of the market. That's why I'm not overly optimistic. I have to manage my expectations and how reasonable I'm being when I approach the market. But I could see us getting to at least 80 to 84 now, okay, with where we're currently trading. And if that occurs, the rest of the crypto market's going to follow. There's a lot of small plays, cryptos that have really dumped to major range lows that could provide a pretty outsized return for the amount of time you'd be in the trade. So we'll look at a few of those. Now, Ethereum, I was talking to the team about this not long ago, has a pretty interesting trend here. From a weekly perspective, we have a very long-term flag. You can see that that is the all-time high. This was a bull trap. All the lows have consistently been hit and reached. Okay, Ethereum is actually currently outperforming all of your majors. We're talking XRP, we're talking Bitcoin, we're talking Solana, and I think that, Yoni could cover this a bit more. There's a lot of really positive news surrounding Ethereum, the developments from their core team. How the fact that they really do have more real-world assets and money on chain than literally any other crypto. And now, when back in the day, Ethereum was so slow and bloated. If any of you ever played with Ethereum, I used to pay, sometimes, I kid you not, $400 just to get into a pool. Like, imagine paying a fee of $400 when you swipe a card. That's insane. But I remember paying that because the opportunity was pretty outsized, and we're flush with cash in those days. 2020 to 2021 was the first time that DeFi really started to take off in these ecosystems. And that was just not long ago, which is crazy, but it feels like forever ago in crypto. I remember paying those types of fees, but then it was slow and congested. So it would take sometimes half hour 45 minutes, 2, 3 hours just to get through a transaction. So you'd already paid the fees and you're just waiting for it to show up. And you're like, dude, oh my God. Then we had this evolution of L2 blockchains, layer 2 blockchains. They would use the security of Ethereum, okay, on that chain. However, these things were faster, they weren't congested, they were extremely affordable and cheap, and we don't need to get into the technology. But the problem was a lot of the value from the ecosystem was now being funneled into these ecosystems, these L2, layer 2 blockchains. Okay. And so now Ethereum's getting back to the basics. They're getting back to, well, we want a lot of that value on our chain. And so they're rebuilding it from the ground up in that way. I wouldn't say the ground up. Let me rephrase that. They're rethinking, or as Larry Fink so greatly said it, reimagining how they're going to approach this blockchain and bringing a lot of that value back. And I actually think it's been taken extremely positively. We're seeing a lot of on-chain transactions for many, many millions and withdrawals. And I think that because this thing's been so deeply oversold and because it's at a very strong support and because honestly, it's pretty undervalued here in all fairness, just for the amount of money on chain relative to every other blockchain. Another interesting thing, right? We were below this range support. And now this is beginning to look more and more like a local bottom, which leads me to believe Ethereum could easily pump to 28 and pretty quick, even if not within the next week, in the next month. I would like to see how these cryptos start to act and operate as they reach these resistances when the S&P, if the S&P, I should say, and the stock market continue to dump. Okay, I think the real test is going to happen very soon, where we're already seeing a divergence. Okay. The divergence is crypto is looking from a technical standpoint more like it's truly decoupled from the stock market. Like it's now viewed differently by bigger investors. We also have a really interesting statement from Paul Atkins, SEC chairman, okay, talking about how like we're going to classify cryptos now, which is extremely positive. It opens the floodgates. Plus that Clarity Act coming soon, like it's huge. Okay. And I just also think a lot of big investors just want to see what else can I toss my money at that isn't fiat currency? Because obviously the dollar is going to go up in this current market climate, but maybe there's some outsized opportunities. Where are they? And I actually think they're looking at crypto now, which is what's caused the current price action that we're seeing. So this with this decoupling, okay, if this thing continues to dump, let's say it dumps to 64, okay, 63, watch the S&P, seriously. And instead of dumping, if Bitcoin even just chilled in the range while those are dumping and then starts to trend back up to its range high of 75, 76, looking good. That looks really good. That's an extremely powerful signal that it's going to continue to trend higher and we're going to do well. Okay. And in every single week that goes from here on forward, as long as the crypto market continues to trade against or even flat relative to the stock market, this decoupling narrative is going to become more and more real. And if it becomes real this cycle, this is the coolest thing that I can think of. If it becomes more and more real this cycle, mark my words, next cycle, it'll trade more like gold. That's going to be cool. When it does, money will flow into other altcoins and digital assets as well. The biggest, the best, the strongest. We're talking the ones that are real revenue monsters that have good on-chain incentives for their token, okay? And anything that's got a narrative like XRP at this point. Because at the end of the day, even if a lot of that value isn't currently on the XRPL, you have to think about it from this perspective, where there's not a lot of tokens unlocked. There's still a lot of very positive developments from the company at Ripple and their businesses that they've acquired where they can integrate and implement. It doesn't mean it's real yet. It just means that those narratives are going to be real for bigger investors with regulatory clarity and also the fact that now they have a spot ETF. So all of those things combined, XRP stands to do well as well. And so I'm actually pretty excited about this. And let me ask you something, and I really want you to sit with this for just a second. You just heard me walk through the S&P 500 rolling over into what I believe is now a bear market. You've seen how gold has topped out despite every fundamental reason in the world to keep running. You can see how inflation is rising. The Fed is stuck. 0 rate cuts are priced in for the rest of 2026. Real estate is stalling falling under rates that are not coming down. And every single vehicle your financial advisor told you is safe is bleeding right now. The nest egg you spent 20 or 30 plus years building is sitting in the crosshairs of forces you can't control and your advisor can't fix. But here's what makes this moment different. For the first time, crypto is decoupling. And even if we see some new lower lows in the upcoming weeks, it does look relatively stronger than many other major asset classes. Because I just showed you on the charts how Bitcoin and XRP are holding up pretty well while equities are dumping. This is like the first time this has ever happened, or at least from my experience. That means that the smart money is starting to view crypto in a different way, not just as a speculative asset class, but the biggest and best are looking more like real asset classes. And many of these big investors want to diversify into crypto and away from the legacy financial system. But here's the problem. Most people that are sitting on $50,000, $100,000, $200,000 of crypto right now are doing nothing with it. Their crypto is sitting on an exchange like a rental property with no tenant. Sure, it might appreciate over time, but it's still earning you zero while you wait. And if we see lower lows, this is just a time opportunity cost. But what if you could take that same crypto and put it to work the way a landlord puts their property on Airbnb? You keep full ownership, you keep full exposure to the upside, and traders are paying you a fee every single time they use your crypto in a liquidity pool, so your capital is actually active. You become a crypto landlord. You collect rent whether the market goes up, down, or sideways, which reduces the volatility in your portfolio. Even if you're sitting on stable coins, you're experiencing no real volatility. You're still earning fees. And we've had dozens of clients who've been winning with this platform using the SGS blueprint. And so while everyone is watching their portfolio go up, down, sideways, worried about what's going to happen next, in the macro, we teach you how to put your crypto to work to create a consistent income stream, even though many people are likely going to feel the pain of the market in their 401k or pension. If you remember in 2008, many people's got cut in half. Many people got hit hard in 2020 as well. Now Social Security is on the table in Congress. The retirements that people were promised are likely not coming. But with this, you are in control and you own it outright. You just need the right information and skill set, because right now our members are averaging about 24.3% APR. Even on the extremely conservative side, stablecoin pools are earning up to 12.6%. And although this might look overwhelming what's in front of your face right now, we show you step by step how to take advantage of these in a very safe manner. So be sure to click on that link in the description for accelerator.altcoinpro.com. This is the very first week we're seeing what I believe could be the start to a decoupling event. The question is, do we hold up while everything else dumps? Okay. So that's where I'm at right now. That's the analysis. It's not perfect. This was less probably teaching you guys direct technical analysis, but I really wanted to give you guys a good view into the market. And for those of you guys who are like, I didn't get any of that, totally fine. I'll be doing a recap. And also, just go through technical analysis essentials. And a lot of just the little things that I did on the chart will make a lot more sense. Okay. And if they didn't make sense, you're like, I've already been through technical analysis essentials. It's because you're not practicing enough, one, two, and two, you should probably retake that course. Do it enough until it starts to really get drilled into your head. Okay. So, ES1 been chopping for a while, chop, chop, dump. Yep. Would you consider buying spot with a stop loss if you wanted to enter with size? I really think it depends on your strategy. So for me, I am buying spot, but I'm not buying spot on with a stop loss in my investment account. Like anything at 70 and under on a Bitcoin, I'm dollar cost averaging into that thing over a long period of time. Okay. So I don't want to stop loss. I think if it did dump to 40, I'm still buying that week. Right. So I really think it depends on your strategy and your time frame, or your time horizon. So you probably should get clear about that. And if you don't know, right, like play some trades and find out what you do and don't like. Find out what works for you and what doesn't work for you. There's no easy answer for that. But if you're talking wanted to enter with size, I would assume you're trying to day trade this thing with a lot of capital. And I think in all situations, that's a really poor strategy. Even if you're right this time, if the market proves you right enough, the problem is you get cocky and arrogant. And everyone does. We're all susceptible to it. And maybe you're not like a cocky, arrogant person. That's not the point. It's that you more often than not, oh, I can take a trade with 30% here of the account. And all it requires is one event for you to get cooked. Just lose a ton of money. That's it. And now you're starting over. Well, look at all the time it cost you, right? Sure, you can make your money back. We can all get that, but we can't get more time. So I never recommend doing size without a stop loss. If you're talking about just buying spot, okay, maybe a strategy for buying that. But like going all in at 50% right now is probably not wise. That I would consider that some serious size, right? And if you're thinking like, oh, like I don't care to lose that whole account. Again, I don't know your portfolio size. I don't know anything about you. So I think it'd be really important for you to reanalyze that. And if you're talking about trading with size and you're like, I have only $10,000 to my name in my crypto anyways, okay? 10,000. I definitely wouldn't be going with size on 10,000 right here. I'm only adding to winning positions over time. Um, and if we're talking, yeah, so I really think it's important to think about that. I hope that answers your question. It's kind of tough. Uh, Bot trading, I think, really sucks 9 times out of 10, if not more. I've used and worked with a ton of bots. We built a ton of indicators in the past. A lot always look cool. If you're seeing a lot of stuff from Mario Nowfall, I think 3 people saw something on his account with this bot that turned. Guys, come on. Like, let's be real. Do you really like these things do not work long term? And if they did one time, they're losing 100 times out of the one time, and you're probably one of those accounts. Okay. The reason he's posting that is because someone paid him to. I promise you. He doesn't have to advertise. A lot of people don't put this is an ad on their deal. Okay. And if he's not advertising, he's getting a cut of the deal. Like there's a lot of things that happen there. Most of these bots, 99% of them really suck. And at the end of the day, it's going to be AI trading against AI anyways. Guess what? One still has to lose. Like there's always a winner and a loser. I actually think our edge is being human in a bot market. Everyone wants the easy way out. That's why they think about bots. But if you're not putting in the grind to build your own bot and don't understand that market, you're still not going to win in it. If someone's selling you just a bot, okay, you're probably going to lose. I don't care how they pitch it. It's no different, guys, than like the fund managers, okay, who are the ones usually with the yachts. It's not their clients, okay? And we're talking like in a mutual fund or whatever. You have to think about it this way. It's like the fund manager always pitches and promotes. Every one of them is going to show you what they did for a client in a good year. Hey, were you around in 2008, 2006 to 2008? How did you manage that? Oh, we weren't around then. Then stay away from them. That's it. In a in a bull market, everyone is smart. Everyone. A rising tide raises all ships. So I just want to I want to promote that and for you to be very cautious. I would even recommend just reading any one of Tony Robbins' 3 books on money. And the first one I read, I remember it was Money Master the Game, probably one of the best books I ever read on that investment in the financial landscape. I mean, it's truly shocking how predatory these environments are. Okay. And that would include most of these tools. There's very few indicators that are worth their salt. So, very few bots that are worth their salt, which is why I use so few of them. Okay. Just as a heads up. I asked you before about Tron. Yes, we can look at that. So, if crypto and Bitcoin and XRP does continue upward, would you still think it is a short term? Okay. I'm a little confused. Would you still think it's short term before another drawdown? Yeah, potentially. So I'm thinking we could see just a retrace because these assets were so deeply oversold and that they're likely going to continue trending down, which is why I'm not 100% going in with size here yet. Does that make sense? Also, nothing that we're seeing right now is actually indicative of what I've typically seen in bottoms in crypto markets. I think that's another key point. What I'm currently seeing right now is not usual for a bear market bottom. If anything, this could be more of a retrace. And so, even if, let's say we did do something like this, okay, and let's just leave it there. Even if we rallied back up to like 84, 85, This is still a lower high and it starts to break down. You'd have to watch it break down in what? A bear market trend. So that's very much a possibility, which is why I'm not doing size. Okay, especially not with a spot investment. My that I look more as okay, long term. We're talking a couple years out. If I had only 100 grand and I wanted it to last a couple years as I'm investing in a crypto, which cryptos, how often? And then be disciplined about that. Okay. Thanks, Paul. Was wondering, plus, what do you mean? What do you learn if using a bot? I'm a little confused by that question, Tom. So you're gonna have to ask that a little bit in a different manner. Bot versus us, we win. I actually agree with that, Alan. I think we're not gonna beat the best bots, but you have to understand. Think about the mind power in the level of knowledge. There's companies or the BlackRocks of the world, they truly have so much data now from their own clients that they can create something quite unique and interesting. So cool. They win their small percentages over a sustained period of time, make billions of dollars. Okay, but that's just one actor in an environment. They're trading against someone else who's got a big, amount of data and AI, and they're trading against someone else. And this kid set up a bot, and that kid set up a bot. At the end of the day, if you just look at a chart and know the basics and understand the structures, you actually have an edge where all these bots might be trading. We might see a lot of volatility in between. In the long run, you can really win. Even in the short run, I actually think our edge is also the fact that we're nimble. A lot of these institutions, they can't just trade the way you and I trade because they're trading with actual size, like a lot of money. And a lot of markets just aren't liquid enough. So their strategies, like a Warren Buffett, they have to sell over a sustained period of time. You and I, we can just click a button and get in and out of a market. That in and of itself is an edge. Warren Buffett doesn't have an edge like that. He can't. He trades with too much money, too much stock. So when you really think about it in that way, we have an edge there. What's his edge? Well, he's sitting in all the right rooms. But just because you're in the right room doesn't mean you're going to be successful, right? He has to actually act on this and act in such a way that he's not going to kill the market. So like it still requires a lot of discernment, self-control, discipline, like the ability to act when you need to act. And so that's his edge and he's obsessive, right? So, like, what's your edge? That's a good question. I got scammed into a 700 indicator that doesn't work. There you are, brother. I'm not saying they all don't work. I'm saying the majority don't. And it's probably best you just don't use them for now until you're really good at this. Then you could probably start to work on a strategy that you've built on the charts to try to build a bot. I wouldn't say the other way around. And I'm not saying I'm not saying they all don't work. It's just the majority aren't battle tested seriously with a large group of people. Um, and there's a lot of pitfalls along the way. I mean, I could explain a million of them, but I'm not going to right now because that's going to be a whole different talk. Okay, so let's dive into Tron real quick, and then I haven't looked at it in a little while, so we'll do that. Tough call. Um, I just keep playing it. I'd play it long with the market if I'm just playing this thing. Just because we look like we're about to roll over on that 1020 EMA. Volume has really tightened up quite a bit. Everything kind of looks like it's locally bottomed for now, right? So you do have a bottom right here, and depending on your threshold for your risk, if you're trading with leverage, don't be doing this. But imagine this, right? Let's say you enter a long position and it trades completely against you and your stop loss gets hit down to 14%. What's 14% of a 15% deal, right? Or 15% of 15% of your portfolio that you're working on. So if it's when I say your portfolio, right? If your day trading account is literally 20% of all your money, okay? What is 15% of that $20,000 or that $2,000? Okay. That's what I'm talking about. If you're trading a spot position, no leverage, that's a big move, by the way, 15%, but that's where you're wrong and that's fine. Or if you're trading real leverage, right? If I'm entering here because I'm like, everything's kind of dumped, this looks like it's pretty double bottom-ish. Realistically, right? What's your upside? It's possible that we just get another little bit of resistance right here and then come back down, right? And so you might be right for a day or two and immediately, turns over and comes to retest these ranges here at like 29 cents. So now you're already stopped out or you're in a big loss when you were right for a very short period of time. So my personal, my experience leads me to want to just either one of two things. Okay. I'm either going to wait for it to hit this range right here at 32 cents, which seems to be a pretty strong resistance once and twice. okay, before I do anything about it. And by the way, what's nice about that type of a trade is maybe if you're using a 10 EMA, it does come up to here, bounces at the 10 EMA, 20 EMA. Let's go to like that's a weekly time frame, by the way. So you just have to like, remember that I'm using different time frames at times. Let's say it does retrace right here, bounces at the 10-20 EMA somewhere around here at like 30 cents. I would enter there as long as we don't see volume pick up on the downside and volume continues to dry up into the 31, 32 cents. Add to your position there, so here and here, and your stop loss should be right below your entry, just below, realistically. If we're talking entering now, okay? Like my stop loss realistically would probably be at like 29.3 or 29.29. So on something like Tron. And because I'm okay to be wrong quick on this. Like the reality is that happens 2, 3 times sometimes. And that's fine because then when it finally hits this range here and I see everything align, which is probably just a better trade to take to begin with. When I see everything align and it's hitting the range that I want it to hit and breaks out on volume, it's like, well, there we are. Instead of taking 3 trades and being wrong twice and then finally being right by consistently hammering at it, sometimes waiting for the market to be where you want it to be, and then entering is genuinely like taking candy from a baby. So I think that's it's one of those things where it really depends on the person, right? And like how patient you are. But me, if I'm not already in right, here, right, or I haven't been in for quite some time, through this entire move, and we're not looking weak, like I'm waiting for a range resistance or support before I do. I'm usually not trading in the middle unless and this is the one factor that's rare, but like my gut's telling me something. Like I'm like, something feels right about this. Like something's telling me this thing's gonna move and I need to get in it. And again, there's a 50-50 chance, and that's fine, but my stop is tight, guys. So I really don't lose anything to try it. But in those environments where it does work that way, it's like, man, when it hits, you make some money. Um, Okay, sorry, what I mean, if you're using a bot, you as a trader are not learning for yourself. Yeah, very true, actually, Tom. So I'm in agreement with that. Uh, Anywho, I think that is it for the call. We've been on, it's 5:10, so about an hour. Um, lot covered today, so we'll do a review and appreciate you guys hopping on. If we don't have any more questions, we will see you on next week's call. Have a great rest of your week. And we're currently bullish. And I do want to watch how, and I think this is something that you really want you guys to focus on. Watch how the crypto market operates, okay? How it acts if and when this next week, right, we start dumping. So if the S&P is just kind of ranging now for a little while, let's say the next week we're really not dumping for new lows, we're not pumping for new highs, we're kind of just playing in a range. Crypto rallying isn't what I'm talking about. Like that's probably going to happen. I think that's very likely. What I'm talking about is if we see even greater sell-offs, a steeper sell-off in the S&P, in the QQQ, another major headline causes these things. Does crypto also dump hard? Or does it just hang out in its range and build a strong base and support? And if it's doing that, that's a signal this is relatively strong. There really are no sellers here. People are still buying up any activity on the sell side, they're buying up. So that's a really good indicator that we might have locally bottomed for a while. Okay? All right, guys. And that is it for the video, folks. If you enjoyed it, be sure to subscribe to the channel. Until next time, goodbye.